Good afternoon, ladies and gentlemen. This is Fari Hamzi. It's about 5:11 p.m. Eastern on Tuesday, the 11th of May, 2021. We have a special president for you. It was supposed to be last week, but with a number of issues, we moved it to this week. Before I get there, we do a quick housekeeping item. We want it to be recorded. A couple of things. Our webinar today in the morning that we do, and then once a week we invite everybody. We'll promise you we'll invite you in, everybody on our list. We have the emails. Was recorded on a different machine, so we posted it on our YouTube channel. Which the way you get in there, by the way, is through this link right here. Our videos that takes you there. Our YouTube channel was just posted. Okay, my apologies. It's because the session we were in did not finish until 4 p.m. We usually have two different sessions, so they don't interfere. I tried to be smart or run it fast because we had a shorter time window. I messed it up. That's my apology. That's one. Number two, as you know, there's a lot going on since Ed Snowden landed in Hong Kong and then Moscow that had to do with security issues that NSA has played with. The SSLs that we have, the lock that you get of the old series is no good. This is the TLS now. It's called TLS. Where we happen to be able to accommodate you guys in our chat room. That's why we're using GoToMeeting, because this page is technically not safe. And our machines, our code on Microsoft Cloud triggers it, won't let you in. You get locked in. It says no good, no good. Has nothing to do with you guys. And I was sick for about a week and a half, 2 weeks. A bunch of people canceled it. We went out of business. We're not gonna go out of business. We've been at this 20 years. No. I was very sick and nobody could get to the chat room and nobody could explain what's going on. We didn't know until this happened. So I hired a new programmer, new server, and we're redoing the whole website. And this would be technically called version 3.1. Once you log in, instead of saying desktop 3, V3, it's just going to say desktop V3, 3.1, I'm saying. Not the login on the top, not the URL. Okay? But that's in the works. Should be done in about a week now. We're almost done. We have to rewrite almost all the subroutines. And then we got to add the next issue we're going to do once we get back up. As you know, Skype last day, Skype for Business. Final day is August 1st. We'll have Teams there. Okay? We'll have the Microsoft Teams, which is a new product of theirs. And for that, we will be running it concurrently as of July 1st. Our plan is during June to finish V3.1 by June 1st, and then team by the Microsoft Teams by July 1st, and then month of July we run it concurrently to make sure there's no issues. And the new fellow programmers come in is excellent fellow, massive background in documentation. I'm extremely pleased. It's a very, very good addition to our team. With that said, let's get to the main reason we're here. First of all, Admiral does not need any explanation or introduction. Mark Esposito, also known as the Admiral SPO was his call sign in the pits of SIBO for about 27 years. Then he ran 12 years, one Chicago, which was single stock futures. That's where I got introduced to the president. They knew I was a practitioner in those areas, options and futures. This was single stock futures. We got to know each other when I showed up in Chicago, did a briefing for SIBO Master Series, what they call this option station, option institute, the master sessions. And so we've been friends since then. As a matter of fact, he was the catalyst for me to move. One of the catalysts. The other one was a tall blonde. I'm very cute. Then I moved to Chicago. Anyhow, I learned a lot from him, especially I come in. It's called baptism by fire. I come in Super Tuesday, February of 2008. By June, we're in a mess. The whole Chicago is in a mess. Rest is history, what we went through. But I learned a lot from him for the next couple of years. We were very, very intensely involved. Of course, then back by 2015, he left One Chicago and has been with me and with us, and we're very, very proud to have him. Okay, with that said, Admiral, I think you want to talk about ES and what happened on the 23rd of April, correct? The Friday, that special Friday. Right, Admiral? Admiral, can you hear me? Admiral, we cannot hear you. Hold on, guys. Admiral, can you hear me? Admiral, I cannot hear you. Can you guys hear me okay? Audio check, please. Hold on, let me go to share audio here. Audio. Hello, 1, 2, 3. Yeah, my audio is good. Mike Kerry, you can hear me. Okay. Can you hear Admiral? Mark? All right, let me call him. No, Admiral. Okay, let me call him. But yeah. This could be my headset. My headset's a little more advanced. And every time he tries to connect with his, we do have an issue. Let me call him. I'm sorry, guys.
What happened? I lost you and I couldn't hear him.
We cannot hear you. Unplug your headset. Put it back in, please. I don't know why we're having so much trouble with your headset, but it is what it is. We probably have to get you a new one.
Anything? Hold on.
No, not yet. Thanks, Peter, for your feedback.
How about now?
Yes, I can hear you now.
Everybody hear me?
Hold on. Admiral is asking if everybody can hear him. Yes, I can hear you now. Okay. We may have to get you a new headset. This thing may have gone through its life cycle, you know. I don't know what you Romans do with headsets, but whatever you do, that's what happens often, huh?
I put it in a box when I don't use it.
Well, maybe that's the issue. You know, it's not Roman proof. You know, you need to buy I need to get you one with the R next to the model number. There's Roman proof.
Gotcha. Okay.
Admiral, it's all yours. I just gave a little introduction about you, and I brought the chart up. I think you've seen the chart. And I also have your Excel sheets ready when you want me. I'll pop it up.
Okay.
And that's it Friday, 23rd.
Okay. All right. Welcome, everyone. Thank you for joining. So this happened a few times so far this year, and I wanted to make a point of explaining what it was that happened. I think it's instrumental in giving opportunity to make money. And when this happened last week, 2 weeks ago on the 23rd of April, I am in the GoToMeeting chat room. I do post a few things, not that often. I did a lot more when we were set up on V3. When that gets back into action, I'll be on there actively again. But when I find these unusual scenarios line up, I kind of think of it as the planets aligning. I like to make people aware, and I, more importantly, would like people to understand what I'm saying so they become educated on it so that they could use it on their own volition, as opposed to waiting for me to make a comment because, you know, as you know, I'm busy doing something else that's very involved and managing quite a big position. So what happens is when I look at the streamers, which we know what the streamers are in the ESs, they're the different block sizes that transact. Right to left is the smallest, were the smaller blocks. Next to it's the medium, then the large, and then the XL. So we're looking at 4 frames of size trades. And obviously, when you look at it from left to right, you basically can see that you've got your big block trades. And then as the sizes get smaller, you're seeing more activity as far as bars are concerned. So what I look for and what's important is I look for the activity in the individual bars that are going on, where that activity is at in relationship to your different bands, your Keltner and your Bijan, which Farid could point those out to you. There they are. And your median, which is the yellow line. Right now, we're looking at the 41.47 spot 60 on the XL as being that median. And then left to right, you see all the different medians that exist, as well as the MBS, which is 41 55, 38, 41, 56, 88 in the very
Right.
small one.
Yeah. Yeah,
So
there's a
when we're
small error there because of just so much data is coming in at that time. That's all.
right. So that's the activity that's being created by the actual trades that are creating these, obviously these bars. And then we have beneath that, we have our CI.
1 second. 1 second. I'm trying to also find the transcript for that day as you're speaking. Go ahead. So I remember you sent it to me.
Yeah, so you have the CI beneath that, and then beneath that you have the CI diff, which basically are those what I call organ bars, where they look like a church organ in the back of the church, either inverted, being red, or how they would normally look if you looked at the back of a church in the green. And we all are pretty cognizant as to how they work. We look for the extension of the CI diffs to be as high as possible, meaning there's a lot of velocity. And when you see that velocity, that means when you look just above it, the CI, you'll see a separation of the two lines. So what I look for a lot of times is I look for what I call a scenario of 4. It's kind of my own verbiage that I use for it. And what that is, I'm looking for when all 4 of the size trades line up in a direction which is synonymous to each other in moving a path up or down, meaning they're trending up or trending down. And it's got to be unique in that I'll explain the scenarios to you, which is why this is so important and which is why it's so valuable. I have done this now this year 3, maybe 4 times, and all 4 times I've had tremendous results. It's really been, like, to me, the holy grail. It's actually where I'll sometimes take my size and multiply it fourfold or 5-fold, because I've been confident in what I'm watching. One of the scenarios in this alignment is that when I'm going to explain what I see here.
I believe that's the one. I found it. Is this the one?
It should be like 8.
It was right before the open, wasn't it?
No, it came after the opening. I think it was 9:34 or something like that.
Because you sent me this, right? That's the day. It's the 23rd. There we go. Esposito. No. There we go. Good morning. No, I'm missing it. It should be somewhere here because I remember I saw that. No, yes. Sorry, I just found this.
All right. Whoa,
there we go. Right there. There you go.
Right there.
This is it. Look at the timeline.
Okay.
Look at that.
So 9:04. Yeah, all AM
Your time.
are all now above medians.
Yeah.
All right. So what this is saying is if we
go.
look from left to right, the first cross to the
Right
upside
right
through
there.
the median is the ES small over to the right.
I'm sorry. I'm sorry. So the
Right,
median would be somewhere in here.
No, it's all the way to the right. It's right there.
Right there.
Okay.
Gotcha.
So we're crossing up there, and if you look at the CI, you'll see that's above the median. You look at the CI diff at the very bottom. Now you're getting the green bars starting to grow. Velocity starting to increase.
Right.
So then I look to the left and look at the median. And if you look at the median one, look down at the CI, you see that one is crossed as well.
There you go, 933. Okay. Yes, correct.
And you're getting the extension of the CI diff bars in the bottom. So now we have a twofold approach to the upside.
There we go.
Now if you go to the ESM large, okay, and you pull in that time frame again, where you see it cross above the median, in the ES large.
Right here. Okay, right.
So it would be over to the right where it crosses above the median.
Right, there's the median, yeah.
Okay, so right there. No, the median on the CI. Look for the median on the CI.
On the 0 line. Okay, got you. Right about here.
The 0 line. Okay.
Okay.
So now you're getting action that's it really happened at 9:49 or whatever that number is. So now we have to me 3 of the 4 pieces in place.
Right.
All right. So I've got the small, I've got the medium, and I got the large all crossed above the 0 median in the CI. Okay. They're also crossing above in the above chart, they're crossing about through their medians, 4140, 4145, and 4149 left to right.
Right.
They're all okay, but if you look at where they cross, it's a different price there and a different price for obviously the medium. So I've got three parts of the puzzle in place where I've got an extension through the medians. I've got CI going above the zero median. I've got all the CI diffs building momentum and creating the large CI diff bars. So what am I waiting for? I'm waiting for the ES extra large to create the same scenario where it crosses through the zero line there in the CI, and it crosses through the median up there to the right, far. It's to the right, come further right.
Here?
Crosses above there, okay?
Right.
And it also gives me the CI definition on the bottom. So when that happens, I've got all four streamers crossing through their zero medium on the bottom, crossing through their medians on the top, and all four of them.
Yes.
All right, it's all four happening. When that happens, one of the other big important pieces of the puzzle is when you step on the gas, which is what they're doing. They're stepping on the gas, they're accelerating. When you look at CI, when you get a separation in the CI, means you're creating velocity in that direction. The extension of the CI diff bars are proof of that.
Yes.
Okay.
Correct.
And the separation in the CI is in the acceleration of the CI diff means we're now stepping on the gas, trending to the upside. So what do you need besides all of that working out? You need room to run. And if you look at your bands, they're all much higher. Every band is much higher from when we're starting the cross.
Yeah.
On the small, you got room to run. On the medium, you got room to run. On the large, you got room to run. And on the extra large, you got room to run.
Yeah, a little bit, yeah.
So you got 47 to 93 is a big run. 40 to 86 is a big run.
Correct.
And when you look at the other one, 45 to 87 is a big run.
Okay.
And when you look at the far right, you look at the small, you got 49 to 92. So you got significant room to run. So when this scenario lined up for me, I jumped in and I went and bought 100, since this was an expiration on the 23rd. My first transaction was at 954 and 955. If you look at to the left to right, you just cover it up, Fari.
Okay, I'm gonna bring it. I'm trying to bring it down so you can see it better.
Okay.
Hold on. Okay, let me go. Oh wait, there we go. Huh? Go.
You got to move your header.
Doesn't
Still
like
have
me.
to move your header. Move your header.
You mean just close it?
Well, I can't see lines.
Okay, there you go. There you go. Now you see.
So if you look at line 3 and 4, there's where I'm making my first trades. Okay. And the time I did them was 9:54. I wanted and bought 50, April 23rd expiry, which is that Friday, that same day, Wednesday, I believe it was. And the strike I bought was the 414, which was at the money. Okay. So I'm buying a call option in the SPY that's at the money. It's 89 cents, and I believe at the time it had about 30 or 40 cent premium in it, meaning the SPY was trading around probably 414 spot 14 around there. Okay?
So same day expiration.
Same day expiration. So I bought 50, and then I bought another 50. So now I'm long 100 calls at the money in the SPY for when I see this activity of it crossing through.
There's no so no time premium. It's all intrinsic.
Well, there's about 30 cents prime premium, 40 cents prime premium. Okay. Because I paid $488.89, which is $414.88, $414.89 when you do the math and the options. And the SPY was trading around probably 415 to 420. Okay. So a little higher, 420 to 430. It's like maybe a $0.50 in premium.
Right.
But if you go back to the chart before we go back to the trades, I saw this as being a huge opportunity because of the room to run, meaning the path to the top where all these bands are was pretty extensive, which means I felt I can get from 414 maybe to 417, 418. Now the SPY, that's a big one.
Here for a second. So for the folks who don't familiar with what you're doing. I mean, not what you're doing, but what this is. Guys, remember, these are Kono probabilities, okay, for each categories of block size coming in. But they're computed like I think 100 times a second. So as ticks come in, we look at volumes, it readjusts those Kono probabilities. So early on, I put the same timeline between these charts because these charts are not time-based, so that Admiral could watch and see what these cones were. So think of it like this. This is coming in like this. He gets a signal here. That's where the cone is. As more data comes in, this cone has to be computed. It's even going further. That's how these values are. Upside, baseline, downside. Go ahead, sir.
So because I have all this room to run, I have a strong premonition that I think we're going to get 3 or 4 points possibly of this trade because there's a clear path to all these top numbers. Okay. And I'm building, if you look at the CIs and all of them, I'm building momentum. You can see how they're all expanding. There's gaps, there's more velocity. And you see the CI diffs, how they're getting bigger and bigger from left to right, bigger and bigger from left to right, bigger and bigger from left to right.
Right.
So that's the reason why I initiated this trade. I have a 4-pronged size attack going through all the important parts in the streamer, being the 0 sigma line, being the medians in each individual size grouping, and now we're just exploding. It's like a rocket launch going to the top side. So now what I did, let's go to the trade sheet so you can see. So what I looked at is areas that I wanted to start peeling off parts of this trade. When you look at 100 calls, a 10 lot of calls at the money is equal to 1,000 shares of SPY stock.
That's right.
And obviously 10 calls is equal to 10 calls as far as the like option to like option, meaning the 414 strike against the 414 strike.
Hold on. Isn't that 50 calls on the SPY? That's 5,000 shares.
I said, but each 10 lot's equal to 1,000. I have 50 and 50, so I have the equivalent of 10,000 shares of stock in the SPY or 100 call options.
Hello, I'm sorry. That's your peel off. Yes, I'm sorry. Yes,
right,
I stand corrected. Yes, sir.
So when I have the position on, if you notice, my first transaction was at 1034.
Right.
I made my first stock sale. All right. I sold it at 415, 1034. So almost a good 39 minutes in as we're seeing the momentum build. So that was equal to 415.09, which basically is a $200 profit. Why? Because when you look at the option, it's an 88 cents, 89 cents option from, well, that's equal to 414 plus 88. And obviously the difference between 414, 489 and 415.09 is only 20 cents.
Right.
And I did 1,000 shares. Now, when I'm trading the stock, okay, as you're going to see in 8 minutes, you'll see me make my first option trade. So I sold a 10 lot of calls, and look at the price I sold the calls at, $1.55.
Oh,
so now I picked up 66 cents against the 89 trade.
So you got
so you might be saying, well, why don't you just sell the calls as opposed to the stock? Because if you look at those two trades, the price differential of the stock to the option, the stock's trading 415.09. When I sold the option at 155, that stock was trading around 415.30. So right now the option trade is a much better profit option trade. Okay, as you can see by the difference of the two there, right there. But there's a reason why I'm doing stock and options. I'm selling stock also on half of my position versus half calls, because when I bought the calls, I own them. I own them at 414, which means I basically have stock at 414.89. And as I sell stock at 415.09. But for those who are pretty option savvy, you know that when you buy a 414 strike or any strike, okay, your risk is only to the strike as far as the downside is concerned. The strike meaning the premium you pay. So here I'm selling stock against that 89 cent option I bought. But if something bizarre were to happen and the market were to reverse, I'd now be short stock and long that call. In this case, I have a 20 cent winner of the price of the call to the stock. But what happens if something negative happens in the market? News comes out, and all of a sudden the SPY drops $3.
You got to
Well,
evaporate this. Yeah.
I would pick up $3 on the 415 stock that I sold if it went down to 412.09, and all I would lose is 89 cents because that's all I could lose on the option that I long. So basically, by buying that call initially and now selling stock against it, I'm creating a synthetic put. And in this case, I'm creating a synthetic put at the 414 price for a 20-cent credit. So obviously, I could never lose any money, and I give myself a free downside shot for the day through the 414 price of the SPY.
Maury, that's very clever.
All right, so now this next trade you saw was a straight option trade to take off 10. So then my third trade, you look at the time, 10:47, I sell stock. You can see the stock moving up a little bit. And It says open after the trade because I don't have a stock position, so I'm just selling stock open against the options that I have that are long. So I pick up 370, but now I got 10 calls that I sold for profit. I sold 2,000 shares of stock to create a 20 slot synthetic, and I made 370 in that trade. So I'm up about $1,100, and I have 2 synthetics on. So now I'm seeing things run up. Now at 1054, 1055. So I make 2 nice option trades because now the options are nicely priced to take a nice little tidy profit. So I sell 2 10 lots out. You can see I made 860 on the 1 10 lot, 980 on the other one. So now I've reduced my position of getting out of the entire first 50 that I paid 89 cents for. All right, now I'm working on my second tranche of the 88.
Oh, hold on. Excuse me. So between the stock sale and the 3 lots, you're 50 out, right?
Yep, that's that first 50 I bought
Right.
at
Gotcha.
89 cents.
Gotcha. Sorry, I'm having a blonde day. So.
All right, so now I'm working on the second tranche of 50. Well, now the stock's got a good price to it. And now what happens is those that are pretty savvy with options, when options go up like this at expiration and they become more and more in the money, what happens? The premium comes out. So that means the price of the option starts to look pretty much like the price of the stock, meaning that as we go higher up, these same 414 calls, when the stock's 415.83, they might only be $2, 17 cents premium. So now I definitely want to sell a few thousand shares of stock to create that synthetic, because now I'm creating that synthetic for almost 88, in this case, 95 cent credit. Okay, so now I've got 95 cents I'm locking in on the stock that I'm selling against the 88 cent trade that I bought in the strike of the 414 in the option.
That's because it's expiring that day.
Right.
Okay.
And now I'm also creating a synthetic put by selling the stock.
Gotcha.
So I did 10, and you notice it was 415.83, and then we had a little hiccup where the SPY was starting to slow down as I was pitting off, and I decided, well, I want to get another 1,000 off, so I sold another 1,000. So that put up 2,000 shares of stock on this last tranche of 50 calls. And then if you see the next 2 time frames, 7 minutes later and 10 minutes later, I sold a 10 lot and a 10 lot at great prices. Okay, 210 and 230. All right, because now there's still some option premium in there, and I picked up 1220 and 1420 on those 2 trades, and that left me with only 10 calls remaining at the 88 cent price of the 414 strike. And I waited as long as I could to watch how far these streamers would run, and I closed out. If you look at the streamers, let's see where we're at. Okay. It
says 12:47.
Yep.
Yeah, about somewhere in between there. There we go. That's about there. Wow. You're getting close to the Kono probability. Yes.
Exactly. So I let go of the last 1,000 shares there because the options didn't have a whole bunch of premium left in there, because if you look at the option, it's now $3 in the money.
Yeah.
It's a 414 strike, and now the SPY is trading 417. It's 3 in the money.
And half day left to expiration.
Right. So I sold 1,000 more shares of stock, and I took $11.90 in profit. So at this point, I made $8,690, less obviously got to pay some commissions on the stock and the options you're trading. But now I have a position of 50 calls long open and
Right.
short 5,000 shares of stock.
Correct.
Okay. Those 50 calls, because it's expiry Wednesday, at the end of the day, if we stay above 414,
I'm sorry,
they are
expiry,
gonna,
no, hold on, expiry same day. It's 23rd.
yeah, right, but it was
Friday.
that Wednesday. It was a Wednesday expiry, not Friday.
23rd was
So-
Friday.
Was it Friday?
Yes,
So
sir.
what's going to happen is that these
There we
options are
go.
going to,
That's 23rd was Friday.
they're going to convert into a long stock at expiry if I exercise them, because they're going to be in the money, meaning that the 414 strike is less than where the SPY's closed. In this
Right.
case,
They're
if
gonna
you look
take
at it right now, it's only a quarter to 1 Chicago time.
Right.
There's still, a good amount of time left in the day. So I've got 50 calls that I'm long, and I have 5,000 shares of SPY that I'm short. Okay, but I've locked up already 86.90 in profit
Oh,
because of the
nice.
price that I paid for the calls versus where I sold the options that I closed out, and where I sold the 5,000 shares of stock price versus the option that I bought. Now, you say, well, what is that position going to do me? Well, that position is giving me free. I have 50 free 414 puts. Now, right now, on the way up, these puts are trading, probably they started trading around 50, 60 cents. And then as the day went on, the stock went higher. They got down to probably 20 cents right around here where I sold the 417 stock. Basically, the difference.
You mean synthetic puts?
No, the put itself, the real put, the 414.
Oh, okay, but there's
The
no put here.
414 strike puts trading for 20 cents.
Okay.
Okay. And that means you could buy or sell that put around 20, 25 cents
Gotcha.
because it still has, 2 hours plus left in it. Right.
Sure. Probability.
So if I wanted to make another, at this point, if I wanted to make another $1,000, I would sell 50 of these puts at 20 cents.
Okay.
Okay. And all that would do was lock up the position to where I have short 50 puts at the 414 strike, long 50 calls at the 414 strike. And that's known as synthetic long stock.
Right.
And you saw I sold 5,000 real stock.
Right.
They would negate each other and the trade would be completely done. And I would have locked up another $1,000 if I did it there. Or if I sold
but you didn't
puts,
do that.
I didn't do that.
Tell us why you didn't do that. So,
Excuse me one second.
purposes.
Excuse me 1 second.
Yes, sir. Guys, he comes up with interesting scenarios. So sometimes if I don't get it, I have to ask him to repeat it,
Okay, I'm back. Can everybody hear me?
Yes, sir.
Okay. So at this point, I could have sold 50 puts at 20 cents and locked up another $1,000. 50 times 20 times 100 is what the option value would have been.
Correct.
But rather than do that, I wanted to sit with the long calls and short stock in case the market had a violent turnaround. And you see like today how we had some violent turnarounds. Because
Right.
once that happens, if it does turn around and the SPY goes down towards that 14 strike,
I get it. Okay,
that put is going to escalate in price.
Yes.
And it could be anything. If the stock goes down to $4.10, that put's going to be $4.
Yeah, but your short stock will. Your short stock, and your limited risk on the option because that's a fixed what you put in, right?
I have no risk on the option, Fari. Okay, I have no risk on the option. I'm long the call, short the stock. Okay, so I have synthetic long put.
I'm saying.
So right now,
worst case,
I own all those puts for credits, Fari. I own 50 puts for a credit.
Oh, gotcha. You create a synthetic put. Okay, gotcha. Toward the end of the day, got it. Mm-hmm.
So if the market were to collapse,
you would make it like a bandit.
Absolutely. I mean, if the market were to collapse to go from 417 through 414, let's say 412, and I just sat on my hands and watched that 414 put, okay, is now going to have $2 the other way. The call is going to be like 20 cents, and the put will be $2 and change. I could sell 50 of them out at $2, and I pick up another 10 grand. I could make another 10 grand in this position by doing this synthetic as opposed to just closing out the call.
Wow.
So it's giving me an opportunity for a downside play. And I didn't give up that much. I gave up maybe $1,000 on the way up, but I locked up $8,700, and I have this free downside play, which on many times in the past has worked. And it's worked in this same scenario that I've done this at previously, one of the 3 times before this one, where I did that and it reversed, and I was able to make on both the sell of the stock against the lower price call that I owned, and then the put became in the money, and I sold that as well.
Now, how many times have you observed this setup?
This is the 4th time.
I see. Okay. So it was happening before too, but you weren't, let's say, chasing it or aware of it. This is the time you have. And every time you post it for us in the chat room, right?
Well, every time I post, I make the comment that, you know, the streamers are all moving through these areas. And I think it's imperative and important that you look at this and understand it, because I think if you learn to read the streamers, the combination of the bands above the Bijan, the Keltners, the combination of the midpoints of all these streamers, the combination of CI and the CI diff, which helps you be able to understand the velocity of the CI and the medians of the CI, really important. And then when you look at the CI diff, the extension of those bars.
Right.
Learning how to read.
Also, you had a very directional day. I mean, this was a massive directional day.
Yeah, but you didn't have that when I did it.
You started near the open, and then it just ran like a freight train.
You know, you remember when I went through the medians. I mean, move everything to the medians of each of those size frames. If you move each of them over, you know.
Oh, you mean bring it like this?
Right. I don't see that. Keep coming. I don't see that yet.
Yeah, of course. Here's your median.
So
you're just hitting the median there.
Yeah, I'm just seeing it when it starts to get through the median. I don't know where it's going.
Nobody
but like
knows.
I said,
Correct.
An important part of the scenario was the bands above.
Yes, there we go.
Were far away from these medians.
Right. Correct.
So there was a lot of room to run. I call it room to run, room to step on the gas. If the CI got really a lot of acceleration, it had a lot of room to run, where sometimes you don't have that. Like if you look at today's action, you got the MBS in the way, you got the different bars and the midpoints, all different time frame. Everything's different.
Of course.
You know, but here it's a perfect storm because you got the medians above, you got the 0 sigma below, and you got room to run on the top. It doesn't happen a lot. It happens, like I said, I've caught it 4 times now in the past month. And it happens to the upside and it happens to the downside. When it happens to the downside, it's a very quick happening because, as you know, we fall faster than we rise most of the time.
Right. Of course.
But by being attentive and understanding how to read the streamers, and a lot of times, you know, I'll put comments out there, you know, the streamers are doing this, the streamers are doing that. The reason why I'm seeing that is because I'm basically giving you a tell as to what's happening. Now, you know, granted, I could sit there and say, spoon feed you and hand feed you, you're supposed to do this, supposed to do that, but I just don't have the time to do that while I'm trading. Right. So I've been trying to help educate people to reading these streamers and ask questions. And to be quite frank with you, not too many people ask questions, or not too many people comment on the levels I put out there.
Right.
But I mean, I bet you if you look at the post of levels that I put out there, and maybe I put 2 or 3 levels a day, maybe 1.
Yeah.
If you look at the levels I post out there, I mean, I think 4 or 5 times I give you the bottom and the top of the entire move in the day.
Yeah.
I mean,
no,
I've
noticed them. And I know Johnny Schmidt. Island Johnny, because he trades them. Yeah, they're gold. I mean, I know you don't do it early. You do it like first hour.
Yeah, I wait for things to happen. I look for I want to see a pattern so I could use that pattern against my stuff that I'm doing myself in my charts and my tail on the market. And you know, it's tremendous opportunity. I mean, if you feel you need to trade a lot, I would go buy a video game and put it next to your trading platform. and just buy and sell at my levels and play the video game if you need to do something.
In between, yeah. Yep, yep,
I mean, because if you get these kind of moves available, and the streamers are the beauty part about this, and that I love is the technology is laying it right in front of your eyes. And I use these streamers every day, every day to trade. And I trade the SPY against them, and I did it again today. If you look at today's action, it's unbelievable. You just bounce off of these levels back and forth, back and forth. You go above them, you go below. You go above them, below.
Do you want me to put up today's action?
Yeah, put up today's.
Give me a second.
I mean,
I gotta get in there. Just let me, because I gotta kill the calendar. Give me a second. I'll go there. 1 second. Just give me a second there. Here, why don't I put the chart up on the trade there for you while I change the calendar, because I had to freeze the calendar on that day. So, okay, 1 second. And that's what it should be every day. There we go. Okay, that's coming in. 1 second. Okay, this one is good. Okay, and then third one. Hold on. Third one is good. Okay, there we go. Okay, first three are in. I'm on the last one. There we go.
So we all know the market sold off last night. And what I do at nighttime, and I'll do it again today after 7 o'clock, I actively trade the SPY off of the ES streamers until 7 o'clock. At 7 o'clock, based upon what I see in the market, be it news or momentum or today's activity, what I do is I create my buys and sells. I put 2 buys out there, you know, maybe 500, 1,000 shares each, and I put 2 500 lot or 1,000 lot sells. And I basically, what I'm doing is I'm looking at the streamers, and I look at today's action. I look how the bands, like Fario was explaining, how they change as the movement changes. And then I compare those numbers to my numbers. And if I see a higher band or lower band that's making sense with my numbers, I basically will put in a buy and a sell on that. So, you know, like for right now, based upon the action I saw today, I have a couple working orders, you know, for the buy side and the sell side after hours, and I'm working to sell SPY at 414.93, okay, and I'm basing that against the 441.53 level, okay. That's 414.93 is pretty much the same thing as 41.53 in the E-minis. And then I'm working to buy at the 412.83 level. And that basically lines up pretty much with the 41.30. So I'm in the small all the way to the right. So I have a buy right now equal to the 41.30 bar and equal to the 41.53 bar for a sell. So those are my 2 working orders until 7 o'clock. And if they break from there, what I do is I look at the other size streamers, because you could tell if you look over to the medium, the band there is 41.10. Okay, so and 41.62. So one's 9.9 in the E-minis higher, and the other one is 20 E-minis lower. So I'll put in a bid and an offer based on those, because that's an extreme move. You know, it's all goes back to the premise that a mean reversion, you know, probability of going back to the mean. And this is what trading is a great deal, very synonymous in your futures, unlike stocks. In these futures, they love the mean. They love the mean. And what's the mean? Look at your median in the ES small, the 41.42 line. What keeps happening there? Above it, below it, above it, below it.
Yeah.
And then look at where these things bounce from. Look at the top there, 41.53, and up there to the top. It ran all the way to the top, and then it came all the way to the bottom.
Yeah.
Boom. Okay.
And remember, this is forecasted, right? Once the bar is finished, no longer changes. But once the bar is active, it's recomputing. So but look at the slope here. So early on, back down here, still the same area. It didn't change much. You
Right.
went there.
And
Look at this
so
one.
I sold
It hit it
415
and
stock at the
reversed.
top there. Up there, I sold 415 stock.
So what I'm saying is that while you're in between, or what Admiral is trying to say, is that while he's in between, this level hardly changed. And guess where
Right.
it hit?
Yep.
As you were coming down short from that, it hit sideways, hit it, and came back up.
So I sold that top part. I sold that top bar and I bought that bottom bar, and I also did trades in between because you could see the action in between. You look at the 41.48 level.
Mhm.
You see it's topping out up there. The 41.52 level, the 41.40, right? Right there. See the candlesticks on all those candlesticks there, left to right.
I'm talking about small. Which panel were you talking about?
The bars, the small panel. Look at the small panel.
Right,
You
right.
see the candlesticks at the top there? Come to the left. Okay,
Okay.
all the way left. See the candlesticks?
Yeah, there.
They're all pretty much in the same range. They're around 41.47, 41.52.
Correct. Correct.
All right, so when I'm seeing this activity happen, and then I'm seeing it blow out to the top one, which is the middle to the right of those candlesticks. All right, now what I'm using as a reference when we go through these medians and through the MBS, I'm using those candlesticks on the left as a possible area where it could get up to and bounce down from, because it may not make that top 41.53 again. And I did that 2 or 3 times. Okay. And then when it gets, I sell it up there. I wait for it to come down to the MBS. If I feel there's enough of a scalp there, I'll take it there. If not, I'll take it at the median, which is 41.42. And there's a nice trade in there. Now, if it breaks there, what am I looking for? Look at the candles. Look at the candlesticks on the bottom side. Okay. Look at the levels. Those are to the left.
Down.
See those?
He's there.
Another level that's probably gonna, from learning how to read charts and looking at charts, that's telling me chances are it's gonna have a tough time going below there. It should have a little bounce, and they always seem to. So I'm buying there and doing it again. So I did that left to right all day today.
Admiral, 2 items. Hold on. First of all, a couple of questions I'm going to ask. I'm going to try to answer, or you could answer. Also, guys, in 2 minutes, markets open. You can see his live. You're going to see his acting go live, because we're going to reopen in 2 minutes. Here's let me read one of the questions for. Sherry is saying that most of us don't have funds to go short 5K shares of a SPY. We have to use leverage we get with calls and puts. Yes, but true. But also you could do futures, which is far more efficient. You're going to get
I do SPYs because I cannot trade futures in my one fund account. Right. So I use SPYs of a surrogate.
Because of fund investors, they have a prospectus. They have to only trade it.
I'm explaining this to you so that you see these patterns. So when I was selling stock, you would be selling futures at a very synonymous price, and you'd be making the same amount of money.
Yes. Well, no, a little bit more.
Probably.
Yeah, leverage is more. Yeah, leverage is more. I mean, more riskier because there's a downside to it. With the option, if you go long the premium, your downside is what the premium you paid. Okay, but with futures, there's no downside. It could be unlimited.
Which is why when you buy, when in that scenario, when you see the stars align or the planets align, you go buy the futures. And what do? I put this out there all the time. I put out there what's called the average true range. Right. Whatever that average true range in, your stop should be right around that range. So you buy it and you put your future stop in 4, 5, 6, whatever that average true range is, you put that stop in. Okay. Correct. And now you're going up in the futures. You're going to start peeling off at different levels. You just have your trailing stop followed up so you don't give away your money. You're making profit if it backs off.
Yeah. We're not saying, Sherry, that you got to use a SPY.
No, I don't want them to use SPY. I want them to trade futures.
Yeah. There's a risk involved there that you're going to be. And also remember, your delta is 100 and your spread is it's 1 tick maximum. It's so liquid.
You got to realize.
I mean, for the options to get in and get out, you got to pay that spread to the market maker. These days, like a cent, maybe at 2 cents. In futures, it's that tick. You touch it, it's yours.
Yeah, and because I can't trade it, and the only vehicle is the SPY.
Well, not yet.
I'm also trading a multi-million-dollar account, so I can do these things. Right. But I just showed you what I did as a strategy. Right. Okay. But the bottom line is use the streamers and you're doing the same thing in the futures, and instead of selling stock and or calls, you're just peeling off. If you bought 10 futures, you'd be peeling off one future at a time. That's all.
Here, let me add something else to you. What's more important here than Admiral? 1 second, please. What's more important here, Sherry, is that somebody like Admiral is using this with his sophistication, with his knowledge. 27 years at SIBO, 12 years at One Chicago. He finds this useful. You don't have to do what he does, but if it's helping him, he should help you too. That's all. That's all I'm looking at.
It's the only reason why I asked Fari to do the webinar is because I've seen this happen 4 times.
Right.
I make a lot of comments in the room. I get only a few people give me some feedback, and a lot of them are very complimentary. Thank you for the help today. It was great. But, you know, a lot of people, I don't know if they're listening. I don't know if they're watching. I don't know if they're even looking at the streamers.
Right.
You know, but this is a tool that makes money. And if the reason why you signed up with Fari is to learn and to make money, this is something you need to utilize.
Right. Yeah. And
also, if you don't, you're
have,
remiss in doing it.
Admiral, we also have, part of it is also we have 3 streamers. We have NQ, we have CL, we have ES. That could be, if they're not concentrating on that asset right now that you're looking at, they need your help to see that event is happening, okay? Or sometimes, Admiral, some people get intimidated. Not because you're not intimidating character. You're very calm and collected. But the stuff you do is sophisticated, and that's all. But the bottom line is it works. Hello?
Well, it works, and you know, don't look at my exact trade.
Right.
I wanted to show proof of the pudding that this is really what happens, and show you how I implement it.
Right.
And the bottom line, it's a future product that creates a future trade. You just trade your futures the same way. I mean,
you have to own
buy,
it. But you
put
have to
stops.
adapt it. Yeah.
Yeah.
I mean, look, Admiral, he's adapted it to what he needs because his current fund that he is in, it's not accepted yet by the fund investors to trade futures. And when that day comes,
so if I was doing
more efficient.
Just a comment to Sherry, you know, if I'm looking at today's action, if I was trading futures, I would be just trading the futures at these different levels.
Yes.
Sell at 41.53, buying at 41.30.
Yeah, right there.
You know, and everything in between. You
Yes.
know, when you got the median is 41.42, looks like everything gets to around 41.50, 41.48. Put a sell in there, put a stop in, okay? So that you're stopped out at 41.53, because if it goes through there, it probably will continue to go up. And then when it backs off down to the 41.42, which is the median level, you buy it back.
Yes.
I mean, it's five future points or 10 future points. Isn't that a nice trade on a 1 lot? I think so.
Yeah, sure. By the way, in the NQ, which I'm actively talking, everybody's listening to it. They can have multiple, can have up to 3 screens on. But the audio is 1, and I'm using that. I did call. Yeah, Mike Carey's here, Johnny Schmidt, Peter Cook. These guys were sitting there. Nancy, I said 3:30 is coming. So look at the timestamp. I just put it in the checker. I said I'm saying right here. 3:30 is coming, guys. Remember, it is in Chicago. They do a lot of program trades at the bottom of last hour, the H hour. We call it H hour. The bottom of last hour. That's 3:30 Eastern. Okay, look at the change. 1 minute to go, they hit it. That's 15:29:04. Look what that happened. So if you got some levels and you have a sense of time, as I'm sharing with you, Admiral is sharing with you, this is a pretty sophisticated trade. And you just sit back, put your stop a little bit above that, you sit back. As he says, 1 ATR. You add the ATR to the entry, it will be somewhere up here, you sit back. That's your stop. You sit back.
Right.
Yeah.
Yep.
Now, after it goes a little bit forward, is what I do. After it goes a little bit forward, I make it trailing. Okay?
Right.
I get a little buffer, then I make it trailing. Because I don't want to get stopped up that closely. I got to give it some room. The moment passes like 7 handle, 10 handle, I make it trailing. That means always 7, 10 handles behind. Then as it approaches here, clear all, exit.
Right. Yep.
That's all. So I let all the stops go. I hit down. Why? Because I knew this level was going to be. Remember, as you start here, think of it this way. Here's what you're seeing. As it gets to 3:30, you see that? That's all you're seeing. But look where the line bottom is. Still is 20 handles. You come down and it's finished at 30. But as this thing was rising up, you could see it was getting a little bit. It was a little bit tighter. It pulls back down, and you get hit. Actually, overshot it. Actually, overshot it, and you're out. And you take, you take to peel off. You don't take all out. We make half out. Two quarters out. I'm saying 2/3 out, and let the rest be a runner. Next question, Peter Cook. Would it be fair to say most of your targets are for trades? I'm sorry, most of your targets for trades are the median yellow center line mark? That's what Peter Cook, our moderator in NQ.
The reason why I wait a good hour into the day is I want to get through the first hour where a lot of the action is taking place, and that's mostly where the patterns start to be designed as to what directions are things are going to be going in. And you got the people that are getting out of their morning positions, they're creating new positions. So I watch the action, and then what I'm looking for is I look at the CI a great deal. I look for when it's oversold. I look for when it's overbought. It's very similar to I glance at what you're doing in the chat box in the NQ, and you're watching all the components, which are the ticks and all these different other instruments you're looking at. I kind of do the same thing with my set of instruments that I'm watching, and I basically look for the opportunity that looks like, okay, it's settling down. I think I've got certain tops and bottoms here. Now I'm going to watch how it sticks to if it can stick to the median, it makes it easier, because if you notice, if you watch this every day, it'll go above and below the median or above and below the MBS. And when you look at that, that's always a solid. In the E-minis, it's always normally 5 or 6 solid points where you could maybe, if you like the trade and you want to put stops in, you can probably make 10, 15 trades, being able to watch this thing going up and down, up and down, up and down. And the important part of the up and down, up and down, up and down, back and forth motion is look at the CI, where it's at when that activity is happening. You want the CI, okay? You want the CI to be as close to the zero medium, like a magnet, hovering it and going above it, below it, almost as a horizontal straight line, because what's that telling you? There's not a lot of volatility there. And if there's not a lot of volatility
like here.
Yes, you could take 4 or 5 points out for 2 or 3 hours, top and below, top and below, top and below.
Sausage.
And you scalp like that. When you get these moves where it's overbought or oversold, that's where you got to be careful to make sure you got decent stops in place, because you're getting big movement now. But it also gives you an opportunity to take advantage of using the bands above and below the yellow median or the midpoint to try and put on a nice sale or a nice buy, which is how I do it. I mean, when it's tight, the market dictates what you can make. Okay, so when I'm trading SPY in a volatile day, I could probably take $1.05 out of every 500 shares I trade. When the market gets where the CI is hovering the line and it's not as volatile, I'll maybe get 50 or 60 cents out of every 5 lot.
Can I ask you?
The market tells you what kind of profit you could take based upon the action.
Quick question.
And that's it. The ATR helps you with that, by the way.
Top of your head, what's 5,000 shares of SPY would need in terms of margin money? Because you have to put up all. You got to put up 25%. 25. So how? So
5,000 times 400 times 25%.
Murray, that's a chump change. A few chump change for you.
Well, it's a lot of money, but it's I wasn't trying to have people.
That's $500,000. 517,000. Gotcha. Okay.
Yeah. Okay.
Yeah. Gotcha.
So I wasn't showing all of this to make it as a SPY trade. No, I wanted you to see that I really do these things constantly, so that you know that it works. I want you to trade the futures.
Yeah.
It's a great leverage tool to do it, and you can do it. What I'm doing with the SPY with the futures just as easily, if not easier.
Yeah.
I mean, I would love to have a futures account when we have these moves like this at night, because when you watch the moves at night, they bounce back and forth on these bands when you got a volatile night, like you wouldn't believe, because its markets are so thin, and when it's thin, you have more volatility, means you have more room to run. They run faster up, they run faster down.
Well,
And that volatility gives you a bigger spread for profit.
well, here's a word of caution, guys. I trade the futures at night too, but I trade NQ, but only like Sundays only, because it gets so thin sometimes. As just what he said, it could get scary. And I'm just like Admiral. I'm trading for fun, so money belongs to others. Very little, but is mine. Most of his others. It gets thin, especially in Q. You gotta worry. You gotta watch out. Now Sunday nights, especially there's news overseas, is more active. Like last year this time. Last year this time, Friday night, Sunday nights was a party. I mean, you could go there, make a serious money, and come back in an hour or two. Right now, sometimes you have to be very patient. You have to sit there. Just not there.
The only reason why I wanted to do the webinar is to show people what I'm seeing, why I'm seeing it, how I'm using it, so that you perhaps could garner an education in understanding it. And if you don't really get it 100%, which I don't think anybody does right off the bat,
Right.
you're more than welcome to ask me a question in the chat.
Right.
What does it look like do we have that set up? And I'll tell you no, and this is why, or yes, and this is why. What do you think about trading back and forth, at the MBS, maybe 8 points above it, 8 points below it? Is CI giving you that indication? I mean, so many pieces of the puzzle here that are helpful to use to trade.
Yes. Yeah, what we're doing is mainly watching and parsing. Okay, I'm sorry, parsing order flow. Order flow by itself is not very predictable and it's very noisy. What we've tried to do have an intelligent parser. That's all we're doing. We actually create our own database. The trade station data is saved in the database. That's why it takes a while to download. If you come in,
when we first met, Fari,
yes.
What's the one thing I said that if you could do, it's the holy grail?
You said breadcrumbs. Watch the breadcrumbs. Follow what the breadcrumbs are of the big guys.
And that's you need to know where the trades are. You need to who's trading what where.
Yeah. Well, we don't know the name, but we know size, right? We know size, and we know price. Yeah. And
because back in the day when I was in the pits of Chicago and the options exchanges, before there was dual and multi-listed exchanges for options, there was only one exchange. It was the CBOE.
Right.
And when someone wanted to trade options in the drug company Merck, MRK, they had to come into the pit I was in to trade it, buy it or sell it. They couldn't go anywhere else. They had no electronic access. They had no other exchanges in the world to go trade it at. They had to walk into that pit and buy and sell it. So guess what I got to see?
So you have regulated monopoly. You saw the book.
I got to see when Goldman Sachs came in and bought or sold, and then I got to see when Merrill Lynch came in and bought or sold.
Murray, you're killing me.
All my years of being there, you fade Merrill Lynch and you go try and do better than Goldman Sachs. Okay? And now what's happened is you have all these electronic components, you got 13 options exchanges. So the only way to keep track of this stuff is you need a database to grab all the data, filter it like doing.
Yeah, quickly. Yeah.
That's what it is.
Yeah, listen, there were two people individuals. You heard the story from me on this. Two individuals in Chicago. One of them was Admiral, of course. Keep pushing me when things got really dicey, post 2008, 2009, because we don't know how things are going to come back. If you have some free time, you've always followed the money stuff, your software. Think about what you could do with the futures and try to find the whale's breadcrumb, not just the breadcrumb, the whale's breadcrumb. Because mom and pop don't move the market. It's the whales. We got to watch them. Now, the size gets smaller and they get less active at nighttime because they don't have, it's a two-way market. There isn't much at that for their size. So at nighttime, you got to be careful. But if you get savvy, you build a filter. The better you get a filter. One more question. Here's what's, by the way, guys, ladies and gentlemen, yes, you're looking at this live right now. And this coming slowly in, and this is all live data right now, 41, 42s. Now, the question is again from Shari saying, I hope I'm saying your name right, ma'am. If you were, this is to Admiral, if you were using futures, would you add the options to your strategy?
It all depends on how I feel about the market. Like that day, if I think the market's really volatile, I'd buy futures and I'd probably buy the puts under the market. So I'd have the same look, basically. So instead of having long calls or long SPY stock, I'd have long futures and long equity puts at certain strikes. So, for me, because I have a huge acumen of what to do, I create multiverse strategies. I've been trading options. I first clerked as an option market maker in 1978.
Wow.
So I've been in front of options, for 43 years. So if there's something to do with an option, I've learned it and understand it and I know what are the best case scenarios in anything that's going on with stocks as far as volatility, pricing, and what the experience has taught me over those years is to learn, and you just keep learning. And I mean, I've learned how to use the streamer from Fari. I've learned future trading from Fari. I never traded future until I met him. And I never understood futures till I met him.
Yeah, but I also add, I've learned a lot about options from you. And I used to teach options, but I've learned a lot from you on options because you're a true practitioner.
So and once you learn, like with Fari now, when he creates a lot of the technology, he throws it at me and says, "What do you think?" And then I see ways to do things differently than he may see or somebody else may see.
Of course.
And then he says, "Okay, if we implement that, what will happen?" And when he does it, and you can see the results, it's great. So yeah, if you have the acumen to be able to use different instruments, why not use them to your advantage? Because what you're looking for. You're looking for, what's the best priced instrument to utilize. If it's an option, it's an option. If it's the future, it's the future. It all depends which one is the best opportunity. And as far as said, you want to make sure you're trading something that has liquidity. And as I say this to everyone that I've taught to trade and every seminar or webinar, you don't have to trade everything. You don't have to trade all the time. The market opens every day.
Yeah.
So the one thing you have to be successful, there's two things. You have to be humble. So you need humility. It means you need to know how to take a loss. If you can't take a loss, then you're never going to be a great trader and you're never going to make money.
Yeah.
You gotta look at it yourself in the mirror and say, that's a bad trade. I'm going to close it out and get flat and start over.
Yeah.
If you can't do that, and you have the philosophy that, oh, it'll come back. I know I'm right. It'll come back. You'll last a week.
Get crushed. Yeah.
Yeah.
You're
not going to last. And the other piece of the puzzle is to be disciplined. Disciplined how? Having your stops in place, but more disciplined in understanding what your capital is and what your capital is that you could put into each trade.
Yes.
You don't want to be big. You want to be small. Size kills.
Yes,
Every time you get too big, I promise you're going to get slapped on the wrist and you're going to learn a lesson.
Right. Today, that's exactly what happened to me today. I went down. I came back. Then it was rising, and then I started everything like froze. All it was really they changed the margins. They went to full night margin at 12 o'clock, and there was a voicemail on their machine when you call in for tech support to take your message. I can call you back because are overwhelmed plus of COVID. It said, oh, by the way, at noon we decided to go to evening rate. No more day rate. No wonder I couldn't get in. So then I got stuck with a negative position that could not come back. Why? It takes remember, you can't have every trade correct. There's no way we're going to get every trade correct sequentially. You're going to get 70, 80% fine. But once you lose 3/4 of your firepower and you dug yourself a hole, you're going to come back. So you know what I did? I just traded the MNQ. I pulled back and I said, you know what? I'm going to do what Patton did at Sijo Baston. I'm going to skin him. When I come back, I'm going to skin him. So tomorrow, I'll come back tomorrow and do it. So right now I can't. So I then left a message with our rep and I said, guys, this is not right. You should not be doing that for future. But now this is done. But it was because I understand the market was down. Probably a lot of people were getting into trouble unknowing. Remember, this is the last 2 days, okay, are the biggest drops we've had in a long time. Look at that. This is last 2 days. Nothing easy. From all-time high. Your Hardy party, or party hardy, I should party hardy. Everybody's go 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 go. Everybody's long, and look how they skinned them. So now I can see what's the poor margin collects are going through, just trying to catch up. At one point, they drop up they drop their hands and say, hey, they say, hey, enough is enough. Let's change the day trade margin. And somebody like me got caught. That's fine. I'll come back in a couple of days. I'll come back. But point is, and here's I'll show you why. This is what I do. This is not even released yet. Look, see the bars? It's telling me the short is coming. You see this? It says the buy is coming. And look how it does. And these are our dots. Boom, 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 boom. And here's the DMZ. I mean, this is not even released yet. This because it's still in test. But look what it does. It's a killer. Except if they change your numbers. They change your numbers, you can fire. So all of a sudden, you're on your last cartridge. It's a different problem. But no, the software has gone through quite a bit. It was a battle tested. It was written, 2013, 14 time frame, 12 to 14 area. We did not put it out until I was in Florida and settled around 16, and so as around 16. And I've got Johnny Schmidt, right? One of the pretty decent sized ag traders. Only trades this now out of Chicago, CBOT. I'd be surprised actually to know how much he traded agriculture. That's all he trades now. Period. This software has been with us from day one, and so forth. So anyhow, any other questions for Admiral or for me? Don't want to rush anybody, but we just want to be cognizant of your time. Hold on 1 second. I need to find the questions. Hold on. What do I do with the questions? Hold on. Where's the questions? 1 second. Oh, view. Okay, there we go. Questions. I swear to you, I can't see the questions. Do you see the questions?
Benjamin's asking, what's the thoughts on Vaxart? Are the big lots trading at all during Globex hours?
Oh, hold on.
If not, would it be best to use Happy?
VXRT. Who's asking the question?
Benjamin.
Okay. After hours, what is it doing right now? This? Hold on.
Vaxart is up 18 cents on the day.
Yeah. But this is not, yeah. First of all, you cannot use in single stocks that easily with the OTF. The technology is not really good. Why? The price, activity, and big traders are not involved in this. This is basically what the VXRT is pickling. You need a pickle jar. You buy it and you hold on 3 months to 6 months. We've said from day one. We've never said you trade it. So you buy it, you hold it. Why? And Admiral could get into that detail a bit more. This is a biotech name. It has to do with FDA approval. And they're still in phase 2, correct, Admiral? I think it's phase 2.
Yeah, and I wouldn't get active on it after hours. I mean,
at all. Yeah.
It's just not worth the time.
I mean, a couple of times we bought on Fridays. 2 Fridays ago we did, and there was a pop on Monday morning, but that was pure earning. And I know some people, now I'm finding out, some people actually sold because they bought it 2 months earlier, around 5.5.
Right.
When I started saying it was around 7, dropped down to 6. And I said, don't let it go past 5 because you can't keep buying it just because it's going lower. Does that mean you're getting cheaper? That means the stock is getting into trouble.
You don't want it to keep going down. I try and buy it every time it dips below 6, but if it dips below 5, that's a very bad sign.
Right, exactly. At some point, you remember, we are Momo traders, and Momo pays us. Okay, so those who bought at 5, 5.5, or 6, but they sold at 12.40 early in the morning of Monday, they made a killing. And they didn't sell it all. They sold a third, from what I hear. Well, 40%. Why? Now it's house money. Now they're playing with house money. That's step 1. Step 2 is this whole thing it has to do with FDA approval. Okay, and they're not ready to submit anything yet. So we got 3 months to 6 months to go. In my opinion, at least 3 months. Admiral, you know this stuff much better than I do. More like 6 months to go.
Yeah, they haven't even begun phase 2 yet.
They have not even begun phase 2. Okay, bravo.
Right,
Okay.
and they have to get through phase 3.
Right. Okay.
It's just that it's a novelty, unlike all the other vaccines, because it's a pill.
Right.
And people don't like needles, and it's a pill that'll be able to hopefully follow through with the strains, the immune strains, and the other possible diseases caused by SARS. COVID is just one of the diseases caused by SARS. There's multiple diseases, and the pill they're trying to create is going to be able to handle all the different variants of the COVID strain and also other SARS diseases. So it's going to have multiple values as far as being able to be a prophylactic for many other diseases.
It's a very, very novel idea. Listen, if they get this thing going, deals may change the way we do things in terms around vaccination. These guys are not dummies. If you read the detail, look at what the press release was 2 Mondays ago. Your eyes pop what you got. I mean, as a matter of fact, a couple of my tech guys, family-wise, this cousin and so forth, they're nerds. They're nerds in Silicon Valley. They start buying more. They said, look at what this is. Even if it drops a little bit, I'll buy. I'm not in a rush. I'll put in 10,000. I'll wait next month. I'll throw in another 10,000. I said, easy, guys. This is not a chip like a DRAM or something, a new CPU. This has to get, it's a health usage. It has to get approval. So slow down and then to the floor and say, I won't buy it below that because then something else may be wrong. But if you accumulate as a decent price and it's not running away, because you don't want to chase it either upside. FOMO is very dangerous. Somewhere in that pattern, go, and then as my sister, because she's a very tough seller. She buys good, she has a hard time selling. She calls it pickling. So I put in my pickling jar. She actually will ask the certificate to be mailed to her. Well, that's her. She wants it in her hand, puts it in a safe. Because she knows on this one, she's not going to be touching it. Most of the stuff she buys is like Southern California Edison. She's more of a, what do you call it, electrical utility, which acts like a bond. She wants to clip the coupon with an upside, okay? That's what she does. In this one, she's going to hold. By the way, 2 questions there. Let me issue. So Admiral has answered the Benjamin Gutierrez question. What's the thoughts on XRT? Now, Mike, let me respond to this. Are the big block trades trading at all during the global hours? Not for stocks. You hardly see it. It would be news driven. So your time series, Mike, would not be very uniform. Therefore, the probabilities we're talking about would be skewed. Would look too good or too bad. Neither of those are realistic. You see what I'm saying? OTF is only used. OTF is not part of Happy. Okay, so it's not distributed. OTF is not going to be. It's not used for individual stocks. We tried it. We tried for big names: Amazon, Microsoft, Google, and I think Apple. I think we ran 4. Netflix, we had issues. Netflix is another scatterbrain. You want contiguous. That's the word. Contiguous. That's a statistical word. Pricing. Okay? With some volatility and a large price of the stock. I want $500 and higher. In case of Apple, it's different, but it used to be 700. Remember? You wanted a high price to create some volatility as a big market cap and a lot of ownership. So you have any given time, you have some buyers and you have some sellers. Okay, that's crucial. Now, what happens here with VXRT doesn't respond. VXRT does not pass any of those tests. VXRT isn't. It's a small stock, small price. I don't know what the float is. Admiral, what's the float on that?
About 120 million.
120 million. Okay, and basically a specialty item. The reason we're after it right now is because of COVID. Now, if you read more inside of it, you can be impressed by what they've done. At least I didn't. My other friends who were and cousins they're not technical. They're technical, but they're not biotech types. They're what do you call it? They're engineers. They do chips and they do CPUs and that kind of stuff. They were amazed with some of the work these guys have done, what the applications are. So you can use the happy. That's what I did here. I put the happy on right there. I'm putting the sigma channels there. Here's the sigma channels. Okay, and look what kind of moves it has had. So you gotta be careful. This is in January or yeah, early February. Went to 24 and change. But this is a sigma channel. This is a CI. You could see what move it's in. Now, if this thing crosses here, then we have an upside leg coming. You're absolutely right to use the OTF. What do you call it? Happy. But there's no OTF because we run the OTF. You don't. We have to put it on there. We're not going to go do that. A, resources, and B, would be a misnomer. Would be a miss. It's not a help to you guys. We're going to lead you the wrong way. The VXRT is not good for OTF. It wasn't designed that way. So remember, contiguous, not continuous. Contiguous pricing. If you look up your statistics, you'll see well, that's it.
Okay, that's it. I want to thank everybody. I hope it was helpful. And like I said, in the chat rooms, if you've got any questions, throw them at me.
Sure. Thank you so much, Admiral. There's one more question left. I'm going to answer that. But hope you guys got a feel what's going on. I would say if you want a trial, I wouldn't say it now because our chat room is not finished. But in a week or two, once that chat rooms are finished, much better than this Band-Aid I call GoToMeeting. We'll send you interesting stuff. We'll send you an invite, especially you, Sherry. But let us get there. Right now, there's too much of going on, and we're just putting it as a Band-Aid, okay? But yes, we will invite folks coming and take a look at not just this scenario, but a number of scenarios. But you'd see three things we always work on: training technology, tech support, and transparency. It's always there. Okay. There's you're quite welcome, Shay. Mike, yes, you're absolutely right. During the off hours, they're running. The NQ and ES are running. Occasionally, you get activity there, like a Sunday nights. Listen, last year, oh my God, Sunday nights were massive. And then, of course, during the week, the news breaks. So news breaks is good. Off hours, yeah. And of course, early in the morning, but you're in Los Angeles time, that would be different. But I mean, I've been up, I've traded from Florida, London. I've traded London. I won't trade. I stop by 9 p.m. If I trade at night here, 9 p.m. Eastern, which is when Shanghai opens. When they open, I close. Because here's the problem: you can get hooked and trade it, and then you lose tomorrow. You're asleep and all that, so you need your rest. But I've gone to bed early and gotten up and traded London because there's a pop there. Either way, up or down, there's a big reaction, and that's around 4 p.m. I don't know what the the summer hours are because they have also daylight saving time stuff in different zones. There, it's very complex. I have to check, but between 3, sometimes or 4, depending on which mode Europe is in, or London. So I should say London is in. You can trade that, yeah. And we used to actually have FDAX. There were folks who were trading the FDAX out of what do you call it, Frankfurt on OTF. And that was a good one. That's another good one. It moves, but we had like one person in Europe. It came down to one person in Europe, and we're basically U.S. based, so we put it aside. Thank you all for your time, and I appreciate all of you attending, and I appreciate Admiral for sharing. It's a tremendous resource, and those of you in the room, guys, engage with him. You'll be surprised what you learn from him. And this is one of the examples of it. I mean, I've learned a lot from a practical standpoint, not academic, but as a practitioner. So it is a treasure. So national treasure. I may even patent him at one point. I just got to find a good lawyer, though. I mean, I understand your wife has already done that, maybe. I don't know.
Yeah, right, exactly. All right, everybody have a great night. I'm going to sign off.
Thank you, sir. Good evening.
Thank you.
Bye-bye.
Bye-bye.
I'm closing this webinar now, shortly. And then, of course, we will wait for post-processing. And then we will email it to all. And we'll post it and so forth, as always. So that if there was a part that I spoke too fast or Admiral, what have you, mainly Admiral. But he's usually a good, calm speaker. I'm the one a little bit more hyper. But once you can go back and forth and listen to it. And it's a format that you can move it back and forth now because it's full MP4. Okay. Thank you all, and we'll be in touch. Good evening now. Thanks, Peter. Thanks, Mike. Thanks, Sherry.